All right, another video on the ongoing commentary as gold is trying to complete its intermediate cycle low. So the first thing I want to look at here is the dollar. Notice that yesterday the dollar was down. I think that's important. Also notice that this breakout has or is trying to be negated. We'll have to see how the day closes. We could always just bounce off this 10-day moving average, and this could turn into just a back test. But right now, it's starting to look like this was a false breakout. And I've noted this many times in the past that tops and bottoms will often occur like this, where you get a false move that triggers stops or triggers buy orders, and the smart money will either sell into the breakout at a major top, or they'll buy into a breakdown at a major bottom. So anyway, the main takeaway here is that we had actually had a down day yesterday. So now let me switch over to gold. All right. So with yesterday being a down day, there's no reasonable expectation um, that gold should be down. So I think what happened yesterday is I think we had an attack to um, generate some selling so that the banks could pick up some more shares cheaply. And I think this is just a new wrinkle that is emerging in our modern markets. As I said, most bottoms will occur as a breakdown below support and then a quick reversal, which is kind of what we have right here. Uh, the reason this is done, you get a lot of stops that build up down here below these support zones. If a bank or a couple of big banks or hedge funds want to get into multi-billion-dollar positions, they need liquidity to do that. One way to achieve that kind of liquidity so that they can buy without pushing price up um, too far, is to trigger all of these stops below a support zone that allows them to enter big positions without pushing the market up. Um, and then the market turns and goes the other way. And it looks like that's what happened right here. And then we get that, the big sell-off yesterday with no real fundamental reason for it to occur with the dollar being down. So I think what we've got starting to develop is just another tactic for the banks to add to shares. They create one of these big scary down days early in a rally. Once they become convinced that the bottom is in, well, you still got a lot of very nervous longs that don't trust this rally just yet, and then they create a big down day, and all of those longs panic and sell their shares, and then the market can turn and go the other direction once the banks have scooped up more shares. I think that's what happened yesterday, and I would be a little bit leery that they may try and pull this trick again on the FOMC meeting. I think that this next intermediate rally, once it becomes um, confirmed that we are starting the next intermediate rally, is going to be a very powerful rally. I think gold is finally going to break out above that resistance zone at 1360, 1370. And so, I think the banks want to make sure they have a very large position loaded at the start of this move. I think yesterday was, a little scam to allow them to scoop up some more shares. They may try and pull this same scam again Wednesday or Friday on the FOMC meeting or the employment report. So um, you might, just keep that in mind. If we get a reversal today, uh, they may knock it down again on Wednesday, and just keep whipsawing people out of their shares so they can build a larger and larger position in preparation for that move um, above 1370, which I think is coming. All right, so just be aware that this does seem to be a new tactic that's being employed by the banks to get into positions similar to the undercut that they've been using for years now. Um, so be aware that this is probably going to happen during bottoming processes now, and it may happen again tomorrow on the employment report. So this may not be the first whipsaw here. There may be another whipsaw, and there may be one on Friday as well. But if we can end the week with a weekly swing um, above 1290, see that would complete a weekly swing. If we can end the week above 1290, then I would be pretty confident that um, the intermediate bottom is in, and then at that point, I don't think there would be any more attacks um, to shake people out of their shares. I think they would release the market, and we could start the next intermediate rally. So maybe a little patience here today, and it looks like we're going to have an up day, but I would be a little bit suspicious that this is just more bait to entice longs into buying a bunch of shares, that they may try and um, run it back down again tomorrow on the FOMC meeting and try and steal those shares again. But overall, I tend to think we're forming a bottom here, even though the bank's going to make it difficult to hold on to that trade for a few days anyway.